This presentation is about energy mortgages and how you can finance energy retrofit projects through energy mortgages. There are many programs available to help with the cost of energy improvements to existing homes. The problem is that most of these programs are reimbursement programs, meaning that the project is evaluated and the money is dispersed only after the project has already been completed. This does not solve the issue of how to pay for the project in the first place, and it introduces the issue of not knowing whether the project will qualify for the reimbursement program once it has been completed. An energy mortgage is one method of resolving these issues. An energy mortgage is a special type of mortgage that recognizes the value of an energy-efficient home. Fannie Mae and Freddie Mac, FHA, and VA have all adopted special underwriting guidelines to make financing energy efficiency a little less burdensome. This means that any bank or lender can initiate one of these loans and sell the loan to one of these secondary mortgage markets. An energy mortgage is available as either a refinance or a purchase option. It provides funding for energy improvements to the home. It does this by recognizing the added value of the home due to the energy efficiency improvements. This can help increase the pool of eligible home buyers if you're in the market to sell your home. There are two types of energy mortgages available. One is called an EEM, that's an energy efficient mortgage, and that is for a home that is currently an energy efficient home and can help a buyer purchase an energy efficient home because the bank will recognize the fact that the utility bills for that home are going to be lower, thus allowing the buyer to have more money to spend on the mortgage. An energy improvement mortgage is a mortgage used to improve efficiency of a home. Either way, these are both called an energy mortgage, and the term EEM is used interchangeably. There's steps involved to obtaining an energy mortgage are pretty simple. First, you have to get a home energy rating, and a home energy rating is performed by a home energy rating system certified individual. They're called a certified HERS rater. Once the HERS rater has performed the home energy rating, they will also perform an improvement analysis if this is a home that is going to be improved, that isn't already energy efficient. The mortgage is then approved based on the amount of money that it will take to complete the energy improvements or based on the energy value of the already improved home. Then home energy improvements are completed. The HERS rater comes back and performs testing on the newly improved home and takes a look at the improvements that were made as a quality assurance measure. Final reports are then completed, and the loan is closed and the funds are dispersed. So, why haven't energy mortgages been widely used in the past? Let's take a little quiz. Could the answer be A, lenders are not very aware of them? Well, this is true in many instances. You may go into your bank and ask, "Can I get an energy-efficient mortgage?" and then either be met with a blank stare or be told, "We don't do those." Well, the truth is that every lender can make energy mortgages. It's just that most loan officers have not been made aware that they can. What about B? Bankers and lenders of all types have had a variety of mortgages available to them, such as adjustable rate mortgages or no down payment mortgages that were relatively easy to make. An energy mortgage is just one more mortgage in their portfolio. It requires a bit more oversight and time commitment, so they may have steered their customers toward easier, faster loan products. How about C? Energy mortgages require a bit more paperwork and more coordination. Lenders may be working from the assumption that the energy mortgages are a hassle, even if they've never done one. Realtors historically have shied away from energy mortgages, thinking that any time you introduce more paperwork and more people into a deal, there is more potential for something to come up that could kill the deal. An energy mortgage, done correctly, actually enhances the deal. But the fear of the unknown and the perceived hassle factor is a reality that we are faced with. As you've probably guessed, the answer is all of the above. But there's also a very real issue around energy mortgages. We introduced D, fear of loss of rate lock. Energy mortgages have a timing issue tied to them. The mortgage is based on the energy efficiency of the home. So once the plan for energy improvements is determined, the loan is funded and the improvements begin. There's a short window of time during which the improvements must be made and the final energy testing must be performed. If there are problems with the energy work or if there are delays, the loan may not be able to be closed within the necessary time frame, and the bank may find itself stuck with a mortgage that it can no longer sell on the secondary market. With our Energy Arm tool, we bring in the Energy Improvement Project Manager. One very important job of the Energy Arm Energy Improvement Project Manager, or EIPM, is to oversee the energy improvement process and keep the project moving forward. The fact that Energy Arm is a part of the Retrofit exchange with ready access to qualified contractors and that it employs the services of a knowledgeable, focused energy improvement project manager is the reason that bankers and lenders are willing to provide energy mortgages for Energy Arm projects. This is great news for homeowners and home buyers because it opens up the availability of energy mortgages to provide funding for their energy improvements. And energy mortgages bring many advantages. First, of course, is guaranteed funding for the project. You don't have to wait till the project's over to find out whether or not it qualified for the program. It brings with it third-party consulting on energy improvements needed, the expected energy savings, and a return on investment. Also, third-party validation of the work quality and the actual improvement results. One of the best things about energy mortgages is they help homeowners recapture the lost equity of their homes with guaranteed improved home values based on energy savings. And having an energy mortgage managed through an Energy Arm EIPM gives the homeowner or homebuyer the added advantage of having an expert on hand who can help ensure that the project not only meets these energy mortgage requirements, but also qualifies for the other reimbursement type programs that are available. So what can you expect from your Energy Arm EIPM should you choose to get an energy mortgage? Let's take a look at some of the reports. You can expect to have some type of a home energy retrofit report. This report will list energy retrofits that the Energy Improvement Project Manager has calculated for you are a good investment. Part of the report will help you understand your cost savings per year, how many dollars you're going to save due to the energy improvements that are being made. And you can look at the energy improvements piece by piece to see how much each retrofit is going to save you. Then you should receive an energy mortgage certificate. This is the FHA version of the energy mortgage certificate. It explains the existing conditions, the recommended improvements along with their savings to investment ratio, present value, simple payback, and what it does to your home energy rating index. This is page 2 of the FHA Energy Efficient Mortgage Certificate, explaining the rest of the recommended improvements, what the energy cost savings are, as well as the information for lenders and appraisers. This shows that the installed cost of the improvements is $8,277. However, the present value of the savings is $11,982. This means that making these improvements to the house is actually adding a value to the house of close to $12,000. This is the Fannie Mae report showing the monthly energy savings that can be expected based on the improvements, which then in this case is added to the monthly income for the homeowner, because the homeowner now has this much more money every month to spend on their mortgage payment should the need be. This energy savings value is actually added to the appraised value of the home because the energy improvements are going to add, as we said, close to $12,000 in value to the home. And this is how making energy retrofits to your home can help you recapture your equity. The energy savings value is the amount of money that it's going to cost to actually create these improvements. So that's a little information about energy mortgages in general and some example reports that you should look forward to receiving once you have completed your energy mortgage.